Welcome to the Friday edition of the Tech Stocks Daily Podcast. Buckle up as we dive into the juicy world of tech titans on the NASDAQ. Today we've got Apple racing ahead with an earnings blowout, yet a stock dip throwing a curveball. Trump media caught in a roller coaster tied to political fortunes and Elon Musk rumors. Roblox playing tug of war with impressive stock moves and some eyebrow-raising allegations. And Supermicro ramping up big time with a global expansion to quench the world's server thirst. Get ready for a whirlwind overview that's worth more than a scroll through your feed. All right, folks, grab your AirPods and tune in because today we're diving headfirst into Cupertino's latest drama-packed quarterly results. The tech titan Apple is making waves again, buzzing across the trading floors and news feeds alike. So what's cooking over at Tim Cook's empire? Let's get into it. On the Q4 fiscal 2024 front, Apple has taken the spotlight by reporting an impressive earnings blowout. With revenue hitting $94.93 billion, the company chugged ahead of analyst expectations. Earnings per share surged to $1.64, sailing past the street's estimate of $1.49. Still, before you old boy from Wall Street types start popping champagne bottles, there's a bit more. The stock actually took a bit of a nosedive right after the announcement. Here's the twist. As exciting as Tim the Cook may be, the thrill didn't quite carry over post-market. Apple stock dipped by nearly 2%. Why? Investors are scratching their heads over a caught-off-guard outlook for the December quarter. Cook and his gang didn't exactly spell out the most optimistic projection for the upcoming fling of holiday season sales, particularly expected to only rise by low to mid-single digits. And folks, that's quite a buzzkill for Wall Street. Now let's talk iPhones, because what's an Apple quarter without cooing over their flagship moneymakers? The iPhone 16 strutted down Cupertino runway earlier this September and managed to foot Apple's phone sales to an all-time high of $46.22 billion this quarter, a neat 5.5% bounce from last year. Turns out, the iPhone 16's charm even crawled into Tim Cook's good hug notes, with developments in Apple Intelligence teasing artificial intelligence coolness. Customers are evidently loving these AI twists on their iDevices, which spiked the adoption of iOS 18.1 at twice the tempo of its clunky predecessor, iOS 17.1. The soul of Siri must surely be siphoning metaphoric electricity for Apple's AI trajectory, though so far the features only offer the edge to morph nifty notifications in their latest iPhone edition. But heads up, chicken nugget hopefuls, only newer iPhones get that AI love for now, so your iPhone 6S isn't going to grow ChatGPT on it overnight. Market twisters like Jim Cramer pitched in, cheering that maybe stocks shouldn't have been riding so high initially on previous wings, balancing expectations as Apple's stock took a mandatory wheel alignment. Unsurprisingly, somewhere hotter than a Californian sunset, Apple's competitors are probably taking notes. But let's save those stories for another day. There we have it. Apple gave us numbers, AI whisperings, and a nail-biting forecast. Let me know, folks. Are you snagging a piece of this apple pie or just waiting for the next bite-sized delight? And there you go. Those are the juicy tidbits on Apple that have us all talking today. Until next time, tech lovers. Today, Trump Media and Technology Group Corp is making waves on the NASDAQ, and not in a way you'd typically pop a party popper. The stock has become something of a financial roller coaster, with more ups and downs than a yo-yo on caffeine. And here's why it's caught everyone's attention. To start, DJT shares took a nosedive of 11.3%, plunging to $31.34. This follows a significant tumble earlier in the week, with shares sliding by a whopping 11.72% just yesterday. Wednesday wasn't any happier, as DJT experienced a 22% decline. Let's put it this way. If this stock was a theme park ride, they'd be selling buckets of popcorn at the entrance. The main driver behind this wild ride is the looming 2024 U.S. presidential election. Trump's media empire and his political aspirations are entangled like headphones in a pocket. As Trump's prospects of winning fluctuate, so does the fortune of his company's shares. The market seems to be treating DJT more like betting odds than traditional stock, tying its fate directly to Trump's political future. Add to the drama the intriguing possibility of a merger or acquisition involving Elon Musk. Yes, you heard that right. Mr. Musk, everyone's favorite planet hop enthusiast, has sparked speculation about possibly merging DJT's Truth Social with X. While it remains speculative, just the whisper of such a collab is enough to get the markets buzzing like a beehive on TikTok. On top of all this, DJT's volatile status has proven to be catnip for speculators and short sellers, akin to throwing chum into shark-infested waters. The financial wizards at S3 Partners have noted the stock's high potential for a short squeeze, driven by a mix of limited float and high short interest. October saw short sellers covering positions, propelling the share price upwards. Think of it like a game of hot potato. Only when the music stops, the potato may cost you billions. And speaking of billions, Trump himself has seen his net worth take a substantial punch to the gut. As the stock altered its trajectory like a squirrel crossing a busy street, Trump's equity saw a value haircut from about $6.3 billion at its high to around $4 billion. Yikes. All this means that DJT stock remains extremely susceptible to the tides of political fortune and market sentiment. If Trump pulls a political rabbit out of his hat, analysts predict the stock could soar to $60. But if Lady Luck swipes left, there's speculation it could become as worthless as expired milk. The TLDR is that Trump Media and Technology Group is the stock market's version of a circus act today, juggling political implications, big personalities, and speculative maneuvers. Investors, analysts, and rubberneckers alike are keeping their eyes wide open for the next twist in this ongoing saga. Fasten your seatbelts, because it doesn't look like this ride is slowing down anytime soon. Buckle up, tech aficionados, because Roblox is making waves today, and not just with its blocky avatars. Let's dive into the pixelated universe of Roblox Corporation and unravel why it's been the buzzword of the tech news cycle. First off, let's talk money moves. Roblox recently busted through its 50-day moving average, hinting at a potential bullish energy boost for investors still deciding which playground to set their portfolios in. For those of you who don't follow Wall Street wizardry, the 50-day moving average is like the stock market's crystal ball, giving insights into price trends and future trajectories. And with RBLX jumping 22.6% in the past 4 weeks, the stock's been riding high like a kid on quantum caffeine. All this comes amidst a fabulous earnings estimate facelift. In the last 2 months, every revised estimation has been pointing up. Not a single revision dropped. Pair that with a Zacks rank number 2, and you have a stock that's practically screeching, "Look at me, I'm the tech star now." Investors are wisely keeping their spectacles on Roblox, wondering if their latest uptrend in line with Wall Street will continue to party like it's perpetually Saturday morning. Now, while Roblox's stock performance is climbing Mount Optimism, the company's underbelly has scuttled into gloomier caverns. Enter Wolf Haldenstein, Adler Freeman, and Hertz LLP, stage left. This juggernaut of a law firm is holding up a magnifying glass and sniffing for potential securities law violations. Allegations are swirling like a whirlpool, all thanks to a bombshell from, you guessed it, Hindenburg Research. Hindenburg dropped a report in early October accusing Roblox of pumping up its DAU numbers like a hot air balloon filled with bot accounts and alternate identities. Fake users galore. It's claimed that this deception extended right into files submitted to the SEC. And if accusations weren't sizzling already, the report points to safety lapses. Roblox supposedly looking the other way on inappropriate content. According to the report, groups like Adult Studios are bringing sensational news, but for all the wrong reasons. So here we stand, one leg in a gold mine and the other potentially mired in quicksand. Roblox's balance sheets might be kissing the clouds, but Hindenburg's report and the ensuing investigation promise a rocky ride ahead. The glitzy share performance is a sweet serenade to investors, yet legal probes suggest an orchestral storm swelling behind the curtain. For an entertainment platform linked arm in arm with creators and developers, these contrasting stories lay chess moves that audiences and investors alike will be watching closely. Stay tuned and keep your notifications on, because in Roblox's world, everything can change block by virtual block. Today, we've got some simulated server sparks flying as Supermicro makes waves on the tech front lines. If you haven't been keeping up, Supermicro, a well-known name in the server and storage solutions sector, suddenly became the talk of the tech town. Now, what could have sparked this burst of attention? Buckle up, because it's expansion time, folks. Supermicro announced that it is investing majorly in its global footprint. Their massive infrastructure boost plan includes a new manufacturing facility in the USA and an increased presence overseas. Yes, ladies and gentlemen, that means more storage, more servers, and essentially an impressive show of computational prowess. Now, why is this significant, you ask? For starters, this expansion is being interpreted as a strategic masterstroke aimed at capitalizing on the ever-accelerating demand for data center equipment. With the race towards AI and cloud computing reaching breakneck speed, companies worldwide are scrambling for servers like never before. Supermicro swooping in with increased production capabilities? Genius. Rumor has it, the company's expansion further aims to alleviate potential bottlenecks exacerbated by supply chain disruptions. Clearly, they have their ears to the ground and their eyes fixed on the future. Let's not forget to mention, their green initiative remains at the core of this expansion. Right in style with today's tech ethos, Supermicro is doubling down on energy-efficient designs. So not only are they pledging to help satisfy this explosive demand, but doing it while keeping their carbon footprint tidy, gaining extra karma points with Mother Earth. Of course, this isn't just a one-way street. Investors have their eyes peeled and are already buzzing with curiosity about how this would shape Supermicro's future on the NASDAQ. They're becoming strategically positioned to not only meet demand efficiently, but perhaps dictate market trends too. But wait, you know there's always a twist with corporate happenings. How this plays out on the global stage, with its nuanced trade relationships and regulatory landscape, remains an exciting question mark. Only time, and maybe competitive responses will tell. So dear viewers, it's your turn on the airwaves. What are your thoughts on Supermicro's aggressive expansion? Is this the golden ticket to powering an ever data-hungry world, or are there waves below the surface we should be cautious about? Are you placing your bets on them capitalizing on this server savviness? Drop your theories, queries, and feedback in the comments. Let's hash it out. I'm looking forward to reading your insightful takes, and maybe you'll spark even more conversation amongst us tech enthusiasts. All right, tech-savvy crew, let's play a little stock market game with Apple. So given the latest news drop about Apple's Q4 fiscal year showdown, complete with mind-blowing earnings, cautious future cries, and splashy AI upgrades on their gadgets. What's the verdict? To buy, sell, or hold? That is the question. Here's the scoop. I'd personally lean towards holding your Apple stocks right now. Here's why. First off, they absolutely smashed expectations with their earnings numbers. Revenue's up, earnings per share up. But, and it's a big but, the stock took a little slidey slide into the red post-announcement. Why? Because even with the sparkle of earnings, Apple's guidance for the December quarter is kind of like receiving socks as a holiday gift. Useful, yes, but not as exciting as that new tech gadget you were hoping for. Their forecast mentioning only low to mid-single digit growth isn't exactly setting Wall Street hearts on fire, especially given the high expectations typically pinned on them, particularly during the holiday shopping fiesta. Plus, despite the triumph of their iPhone 16 sales, Apple devotees might find it a tad annoying that only the fresh-off-the-line devices soak in that fancy AI pizzazz. Cue grumbles from legacy iPhone owners. Now, don't forget the big picture. Apple is a powerhouse with strong fundamentals, a loyal customer fan base, and a penchant for innovation that's dialed into Earth's curiosity center like no other company. So while this temporary bout of market jitters might be cowering here and promising thrills there, long-term prospects shouldn't be overlooked. My advice? Hold on to those Apple stocks, keen watchers. Time might balance this out, with opportunities maybe peeking out from behind new upgrades or marketing sizzle some way down the line. But remember, those stock market dance moves are yours to make. This chat was merely your friendly neighborhood nudge to consider from high above those data clouds. Be sure to march your fingers over your own research path. Maybe chat with a financial advisor, then decide if you want to stay cozied up with Tim Cook or not. Keep those eyes peeled on the news and those portfolio fingers nimble. Today was a whirlwind of tech market drama, from Apple's roller coaster earnings report causing a ripple of cautious sentiments to DJT's stock yo-yo ride tied intriguingly to political fortunes. Meanwhile, Roblox is swaying between triumph and turmoil, with impressive stock performance shadowed by allegations of inflated user data, and Supermicro is revving up its expansion engines to meet the booming server demand. If you've enjoyed keeping up with these exciting twists and turns in the tech world, don't forget to click like, subscribe, and share this video with your fellow tech enthusiasts. And make sure to circle back on Monday for another jam-packed update. Have a fantastic weekend, everyone.